What's up, you guys? Happy Homeownership Month and happy Tuesday, June 15th. Actually got the day of the week right this market update. I got quite a bit of feedback from you all last time saying that it was Friday. It was in fact a Tuesday, but hey, Preston Acres Realty, every day's Friday, right? But anyway, let's jump right into it. Got a great market report for y'all. So let's get started. One thing we wanted to talk about is, of course, the seller versus buyer's market. So this is a rating, a map rather, that the National Association of Realtors put together, rating seller traffic, how much listing activity there is on the MLS. And you can see where we are right here in Tennessee. We have a weak seller traffic rating. Other parts of the country are starting to come back, from the listing shortage that we faced. But us here in Tennessee, not quite yet. Still a tremendous shorting of listings compared with the buyers, as you see here. This is the same type of map the NAR put together, but this one rates the buyer traffic. And like most of the US, our rating is very strong. Big surprise. Tons of people are out there shopping for homes. So if you've been questioning the idea of listing your home, now is the time. It is a tremendously strong seller's market. We'll talk more about that in a second. This graph shows the month of inventory for sale. Months of inventory being, if no new homes came to the market, this is how many months it would take to, the current demand to exhaust all of the available housing supply. And encouragingly enough, we are starting to come out of the insane lows that we saw towards the end of 2020 and the beginning of this year. Still very low levels of housing supply compared to a year ago, which was actually historically low even then. So what does this mean? Well, it means some good news for homeowners. The numbers from March of this year have just come in. This is the year-over-year house appreciation averages according to the Federal Housing Finance Agency House Price Index, CoreLogic's Home Price Insights report, and the S&P's Case-Shiller National Home Price Index. Phenomenal rates of appreciation reported. Who in their right mind would have guessed that we'd be reporting rates of home value appreciation as high as almost 14%? That's incredible. It really is. This is how our region performed last year in year-over-year home value home value appreciation, 11.7%. Not too bad. Not too bad at all. This is what has been forecast by the 5 major researchers of home prices for the remainder of 2021. And if you recall last month's report I sent out just for comparison, these have all been increased. We had 6.8% average appreciation forecasted back in May. That's now up to 8.2%. So on the rise, it's been upped. Those forecasts have been up. We're going to see higher rates of return in that. Now, this wouldn't be a Preston Acres Realty market report without some good quotes. So here you go. If inventory increases slowly, house prices will continue to rise rapidly. And if inventory increases sharply, house price growth will slow. That's according to Bill McBride with Calculated Risk. Now, I've spoken before about the challenges that home builders are facing with these insane material prices, which has led to the decline in production of single-family homes. Here's what Robert Oles, he's with the National Association of Home Builders, was quoted saying about it. The decline in single-family permits indicates that builders are slowing construction activity as costs rise. While housing starts were strong at the beginning of the year due to home builders constructing homes that were sold pre-construction, higher costs and limited availability of building materials have now paused some projects. Now, this brings up another topic I'd like to hit on really quick: housing affordability. There's a major difference in affordable housing versus housing affordability. Two totally different conversations. Affordable housing oftentimes refers to homes on the lower end of the market available for purchase, starter homes. Housing affordability, however, refers to how strong and how powerful the dollar is relative to what someone can buy. This is what I mean. Today, on average, only 14.4% of the median income is necessary to purchase a median priced home. This graph shows it in 2006, and then, of course, in the years between 1985 and 2000. Home ownership is affordable. Home ownership is absolutely affordable today. Not only is it affordable and possible, but it is vitally important to financial health and success. I like this quote a lot from Mike Laughlin. This is what he had to say. We need to stop seeing housing as a reward for financial success and instead see it as a critical tool that can facilitate financial success. Affordable homeownership is not the capstone of economic well-being, it is the cornerstone. Well, what does this mean? Well, mainly it means the increase in wealth from the growth of value and equity in your home. Look at this. The amount of people who had 50% equity in their home has skyrocketed as of the first quarter of this year anyway. Here are the raw numbers. 31.9% of all mortgages reported as equity rich. That means they had 50% or higher equity in their home versus what they owed. That's 17.8 million total. 38% of all homes in the US are owned free and clear, 100% equity. That's real wealth. And it's wealth that you can participate in. So now I like this a lot. This is according to a Gallup polling this year. Real estate remains the top choice by those surveyed for long-term investment compared to stocks, gold, savings accounts, bonds, etc. Here's a track of the same poll, which Gallup has conducted every year. This goes back to 2011. We were coming out of the Great Recession and the housing bubble. Notice the amount of people putting their investments in gold and precious metals back then versus real estate. Now look at that today. But more importantly, look at the rise in people realizing their wealth using real estate. This includes everyone buying their first home, house flippers, landlords. You get the idea. So I want to talk about that for just a second. So if you're someone who is looking to make that choice, whether you're just buying your first home, you're wanting to move up into that larger, bigger house for you and your family, let's talk today. I really want to help you get on track to realizing that dream and making that real estate wealth something that's possible for you. So I hope you guys enjoyed this market report. It was kind of short and sweet. But anyway, really enjoyed giving it to y'all. So I'll see you all next month. Bye-bye.